XRP's next price target is $1.83. Is now the right time to take some profits before we see the next short-term crash? That's what we're going to cover in today's video. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jigay. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been trading currencies for 15 years now, focused on crypto, featured in this best-selling book back in 2008, High Probability Trading Strategies, legend of a book. Let's dive straight in. So let's just quickly do a recap. I did a video a little while ago, and in the video, I looked at the previous video. And what we said was we're due for XRP to do this wave 2 correction, and we should expect a trend reversal. Now, we were bang on the money, right? We was just it was great to see. If I go to a daily chart, you know, this was where the video was. If we just look at this, down here, wave 2, and we had a nice trend reversal, And then the last video was really focused on this area. What should we anticipate for the market to do next, especially in this area down here? That's what we want to look at. So in the last video, we looked at this A, B, C correction. We dived into an hourly chart and we got really, really precise. We got so precise. I don't normally go into the lower time frames because I want to get the information out to you ASAP. But what we said was, if we just look at this, because sometimes just bang on, Elliot waves and Fibonacci is so powerful when done correctly, and it gives you a high probability of really picking the bottoms, so you can minimize your risk and maximize your upside. And by the way, if you want to learn how to do it, take my free Elliot wave Fibonacci masterclass. I just teach you how to do this because I can do only so many videos each week. Yeah, so we're saying this wave A typically breaks down to a 5-way sequence, 1, 2, 3, 4, 5, and we've got this nice price target. We have these two price zones, this one and this one. And if we jump into an hourly chart now, let's just see how it unfolded. This was the box that we drew. Have a look at this. Look at this. This was the box down here, and it just reacted perfectly, like boom, right into that zone. So that's what we're going to focus on today. Looking at what should we anticipate next. Is now a great time to take profits? And what should we anticipate after taking profits? So this is an hourly chart. We're going to focus on this move here, right? This part of the market. So let's now just clean this up. We don't need this here. We are saying this looks like a nice wave A, a wave B, a wave C, and now we should anticipate a wave 5. What do you mean a wave 5, Jigay? How does that work out? Well, let's just look at this. Let me just make this like this, because the first thing we want to do is an Elliot wave count, and then we'll do the slightly more bigger degree count, because around 50% of the time, the markets will have very clear patterns. And this is just textbook. Look at this. Wave 1, wave 2, what looks like a nice wave 3, a nice correction of an A, B, C of a wave 4. And now it looks like we're forming this wave 5. And we want to be very aware of a wave 5, because after a wave 5, you tend to get a correction. Now in the title, I refer to it as a short-term crash. Now corrections are healthy, but you want to be aware of it, because if we do reach, I'll cover the $1.83, if we do reach that price target, what should we anticipate next? And that's what you want to be aware of, and your strategy. If it's just a long-term buy and hold, you don't need to be worried about these daily and weekly movements, or monthly movements even. But if you are on a shorter time frame, then it's really, really important that we look at this. So this is the wave 3 high. We need to put a question mark here. Why? Because it hasn't been confirmed yet. Let's just change this to black, boom, and then we're just going to go 3. Nope, so I want a question mark. There we go. It just reminds us, right? In fact, sorry, let me just make it a bit bigger. Just reminds us that we need to close beyond this high over here for this wave 4 low to be confirmed, right? So it's not confirmed yet, but there's high probability. Let's look at what we have. Let's look at the information. Weekly says is bearish. The blue line's crossed below the red line. Says the upside should be limited. Then we look at the daily momentum. We got a bullish reversal here. That's what we anticipated in that last video. We said we should anticipate this bullish reversal and this wave 4 low. So on the next, let's draw this here. Bearish reversal, when the momentum goes up and down, is likely to coincide with a wave 5 high. And then what we should anticipate next, that's going to be the important part. Really, really important. So this part here and then the next part afterwards. So we've got two pieces of information. Weekly is bearish, so the upside should be limited. The daily, which is like a shorter time frame, is bullish. So we say, look, well, a few days, or we should expect sideways to up. And then when the daily and the weekly coincide, it's a dual momentum signal, two momentum signals on two time frames saying it's down, then we should expect a correction in 3 waves. So now let's just focus on the hourly chart, right? Because I want to get a bit more precise, because I want to show you a few key strategies that you can use to maximize your profit taking, because you can read the markets like a book. Now, look, it doesn't mean it's guaranteed 100%. It's just high probability. That's what we're always looking at. So what we're going to do next is, let's just delete this. I'm going to do this fresh. We're going to project. In fact, I'm going to do it like this today. Let's do it like this today. This is the outcome for today. We're going to project wave 5 price target. That's going to be number 1. And then we're going to talk about profit taking. Let's just talk about profit. Profit. I'm going to write risk-free. I'll elaborate what that means in a second. And then what we should anticipate. Anticipate correction. I used to be a math teacher, guys, so if there's any spelling mistakes, math is my forte, not spelling. Here we go. So, well, they're the 3 things that we're going to cover today. Project wave 5 price target. All right, okay, let's do it. Let's do it. All right, so what we're going to do is, let's get rid of this. Let's also get rid of these lines. And let's also get rid of this for now. So keep the price as clean as we can. We got a nice wave count, 1, 2, 3, 4, 5. What is an end of wave 5 price target? Well, one of them is, and this is probably the key one, is you measure the low of wave 1 to the high of wave 3 and project it from a wave 4 low. Now again, the wave 4 low is not confirmed, right? So we also need to have, by the way, let's best practice to also do this, right? Because the market can go on to make a lower low. We want to be aware of that. The market can do this, right? And that will turn into a complex correction and we need to reevaluate. But from an Elliot wave standpoint, it should not close in below the wave 1, into the wave 1 range. But from a high probability standpoint, we can be fairly confident that the wave 4 is going to hold. And unless this low gets taken out, that is the opinion of the market. If it does get taken out like this is important. I'm covering this for a reason, because a lot of people get too precious about being right or wrong. It's not about being right or wrong. It's about making money. Making money is about probabilities. And if you've got the edge in your favor like the casino for long enough, you win. If it does this, then we just reevaluate, right? Because then it just might be a complex correction. Right, so let's do the end of wave 5. So we've got this number here, right? There's 2 targets actually. In the title, I said $1.83. What was I basing that on? I was basing that on this, right? I was basing it on this. Here it says $1.87, slightly higher. I probably just ticked it slightly higher. But this is the range of wave 5, end of wave 5 price target. You might be asking, Jagir, is that enough information? I go, no. We want a bit more confirmation. There's 2 other price targets or projections. We're going to measure this wave 1. Let me just make sure I do this right. Measure this wave 1. Project it from this wave 4 low. And wave 5 and wave 1 have a direct relationship. And often it's 100% to 1.618. Right, and you see it's probably going to be the 1.618 because it's closer. We're always looking for Fibonacci clusters. We're going to be aware of this, but it's really the previous high. So we can actually keep the chart clean by saying actually it's likely to be this one. And also in crypto, you'll find that wave 5s tend to be overextended. A lot of panic buying happens and a lot of people lose money because of what happens next. And that's what we're going to cover. So part 1, boom, we did this, yep. And we're going to now do one more, which is the external retracement. I covered some of this stuff, a lot of this stuff in the masterclass, which is in the link below. Because if you can learn how to do this, well, 1, you'll get more value out of my videos. But 2, hopefully you'll be able to do this for yourself, because you're probably trading and investing in so many different tokens that I haven't got the time to look at. So you can do this for yourself. So here we've got this price cluster. This is the high probability zone. So now we've got this price zone and the extreme is up here, but it's more probable it's going to be down here. Next, we're going to look at, so let's just draw this here. We've got this target here. Oh. this here. What we're going to do is keep it simple. Let's have a quick price target, sorry, time target. Wave 1 and wave 5 often equal each other in price and time. And similar to price, the maximum tends to be 1.618. So now we've got this price and time zone. So what we're going to look for is actually what we're seeing here. Now, it doesn't mean it's going to happen. I'm going to keep reiterating that, because as soon as you think you know what the market's going to do, like guaranteed, you've lost. Because you're going to overexpose yourself. You're not going to keep to your risk allocation. And then all it takes is 1 or 2 bad investments. Boom. Then you're in a not in a good place. So what we're anticipating is a wave 1, 2, a wave 3, 4, 5 of a wave 5. That's what we're looking for. Right? That's what we're looking for. And we're going to make this into a micro count, which is nice and clean. And there you go. And let me draw it like this. So you got the waves, because here we're projecting now. We're projecting. Now, if and when the next wave forms like this, if it forms like this and like this, if it does, and again, I'm using the word if, as soon as this high starts to form, at this stage of the market, we can do some really, really precise projections for high probability. And if we jump back to the daily chart, it should coincide with the daily momentum. We want to see if the momentum's going bearish. We hit a pattern and price zone and a time zone. So there's 4 things telling us there's a high probability of a reversal. So what I want to show you today is profit taking. So here we're moving to point number 2. So we've got project wave targets. Right, we've done that. Successful. Done. Let's get rid of that now. All right, done. Do it like a checklist. Right, next, profit and risk-free. I don't know when you bought XRP, or if you're looking to buy XRP, here is the worst time to buy XRP. Here is the worst time. Losers buy here, right? Amateurs buy here. Fear of missing out. Even if the price starts to surge, do not fall for the trap, because it's panic buying. What happens after panic buying? You get a big drop. That's just the name of the game. You want to be getting into the mode of where you saw my last video, this video, down here, closer to this wave 2, right? When the price was, well, let's have a look what the price was. The price down here would have been around 50 cents, right? So that's nearly a 3-4x from when we did that first video. This is where winners buy, right? Either down here and trend reversal, or on the first pullback. That's what we're looking for. Then we can ride this wave 3, take some profits, and then we can ride this wave 5, take some profits, before we're going to get, more than likely, not guaranteed, more than likely, the correction. So would you like to see profit taking? All right, so here's a couple of strategies. I'll just give you one. I'll give you one. Keep it nice and simple. You see, I'm going to zoom in here, because I hate, I find it, I never give price target kind of advice, especially on YouTube when there's comments, where should I buy, where should I sell? What I'd much rather do is give you a strategy, and then you can tweak that strategy that suits your personality, and then you're not just blindly buying and selling, you're doing it for a reason. You see these markets, this market goes up and it comes down and then it goes up again. All right, this down here is what you call a swing low. And what you can do is you can set a price target on a swing low, because when a swing low gets taken out by a price, it normally indicates one of the first signals that the trend has reversed, right? The trend has reversed. So this is going to be the strategy, the swing low strategy. Very, very simple, very, very clean. And if you're using sophisticated software, you can, set stop losses and buy orders and sell orders and so on and so forth. But here, you can even set a price alert. So let's just say we were trading this and we knew it was likely coming up towards an end. These little things here, these swing lows, are literally swing lows. And when you get a new swing low, you just move your stop loss here, or where you're going to sell here. And then when you get high enough, the market takes you out, right? And what that does is 2 things. One, it keeps it very mechanical. It's like when there's a new swing low, boom, I'm going to move my exit point. But what it also does is it confirms your belief that you don't know what's going to happen. There's only high probability. So if this happens, guess what? You benefit. You benefit because you haven't exited yet, and you just keep doing the same thing. Swing low, swing low, swing low. And let's just say the market just keeps going. Let's just say, I don't know, there's a news announcement and no one was expecting it, and it just keeps going. And then you just keep moving. And then when it does correct, bam, the market takes you out, and then you've captured most of the move, because the big money's made in the big moves. You have to understand that. So now let's just keep it practical for what we're talking about right now, right? So right now, if you've got the belief in Elliott wave, if you've got enough experience in Elliott wave, and you go, right, so this is what I'm going to say to you. This is the strategy. As a proposed strategy, you choose, right? We're going to say, we're going to keep our stop loss relatively far away from the market price until the momentum gets into the overbought zone. It means when the blue and the red line enter this zone, right? Enter the zone. And then that's the first indication that the market is running out of steam, and we may see a momentum reversal, which will reflect often a price reversal. And then we're going to jump back into the hourly chart and say, if we see a 5-wave structure, a 1, 2, 3, 4, and we're on this fifth part, then we're going to start trailing our stop loss. Either you can do it on a macro picture, which is this swing low down here. So it'll be this swing low as the market comes up. But what you're going to find more often than not, I'm just going to delete these pink boxes for a second. Let's just get rid of these. What you'll find is this final wave will tend to also break down into 5 waves, like something like this. But you don't know how far, it might just overextend. So again, like I showed you before, what you're going to do is you're going to have a stop loss at this swing low, and then you just move it up if you get the next swing low, and if it keeps going, and then you might be able to get it to quite close to the top of the market. This is how I often exit, near the top of the market. It's not always perfect. It might just overextend. It's happened to me plenty of times before, but more often than not, you'll get most of the market. And when the market does move down, this will exit you, the price will exit you, rather than you emotionally feeling, should I buy, should I sell, should I sell, should I buy, should I exit? Oh my God, it's moved up. Oh, I don't want to sell because it might go up more. Oh no, it went down. I should have sold. Oh no, good, I didn't sell. That's what most people do, right? And it's an emotional roller coaster. What the pros do, what you should be doing is just say, business. If the price does this on the next momentum reversal, when it's overbought, or if it's in the overbought zone, where we just talked about blue and the red line being in the daily chart, being in the overbought zone, and there's a 5-wave structure, and it's hit my Fibonacci price zone, I'm going to trail my stop loss on a swing low basis, and then move it on the next swing low, on the next swing low, on an hourly chart. Now all of a sudden, you're not thinking. You're just literally going, right, where's the next swing low? There it is. It's objective. Like, we can both agree that's the next swing low. And then if the market goes down, let's just say the market did this, down, but then went up again. Like, it overextended. We go, that's possible. And we want that to happen. That's good news for us. We go, great. We just put it here. And then let's just say it keeps overextending until the market turns and reverses and then takes us out. Bang. That's the strategy. Hopefully that's making sense, and I'm hoping that's making sense to you, because when I do a lot of my technical analysis, you know, it's all about probabilities, and often people find it difficult to get that concept, right? So now let's just finish on what should we anticipate, right? Okay, there's a bit of forecasting because we haven't seen this 5-wave structure, but it's high probability. So let's just say this market does this, but give you the high level thinking on why I'm saying now might be a good time to take some profits, especially if you bought a little while ago at 50 cents. And now you might be at 2, 3x, maybe even just exit in a third. Exit in a third for the longer term hold. So we're going to look at 2 things now. Let's just bring up my notes. What was my notes? What was in my notes? It said profit risk free. So we said that, right? Boom. So we got that done. Hopefully that made sense. Right, last thing. Anticipate the correction. And then I'm also going to write after correction, because this will help with your medium and long-term strategy. So what should we anticipate? Okay, let's just say the price does do this, exactly this, right? Let's just assume that it does this. Let's just clean this up. Get rid of these, get rid of these. This one we can get rid of. Get rid of this. Okay, that's fine. Get rid of this. Right, cool. What should we anticipate? I think I got this. Have I got this chart? I have, yeah, great. Wave 1, ABC. This is what we're going to focus on. Let me just do this for you. I'm creating this into a little lesson. It wasn't the plan, but hey, it's life, right? Go with the flow. Well, we've got this nice 5-wave structure. We're looking at what looks like this part, we're getting to this part, looking to take some profits, and then we're anticipating a correction. And a typical correction happens in an A, B, C correction as a minimum, 3 waves down, and then we should anticipate new highs being made, right? New highs, which means above this part here. So now we're going to go back into the live chart, right? So now you can see the similarities. We're going, okay, 1, 2, 3, 4, and if this 5 occurs, now we're saying we should anticipate a 3-wave correction. A correction that's bigger than any previous correction in this sequence, right? Which will be an A, B, C. So let's just keep it really simple for today. We don't need to go too detailed. Let's just get rid of this for a second so we keep the charts nice and clean. We don't need this for now, and we don't need this, right? Hopefully this is making sense to you. We're just going to do one thing, which is a retracement. Most corrections, let's do it here. Let's just say we did reach $1. Let's be a bit more conservative. Yeah, let's just say we reached only $1.60 as opposed to the $1.83. We should anticipate 50% to a 78.6% correction. How long should it take? It should take a minimum of 50% of the previous move. We're anticipating here, so it's not guaranteed yet. It's not confirmed yet, should I say. And the typical maximum is 100%. So now we just got this nice little price range and time range. Here we go, bump, bump, there. That's what we're anticipating. So if it does hit this low of 78.6% retracement, that is 74 cents, right? So $1.60 to 74 cents, that's more than, it's like 50%, 50-60% of total price movement. That means if you're running, if your XRP paper money, as in what you got in your account, is worth 20,000, it likely is going to drop down to 10,000. But now let's just finish on the last thing. So we said, I'm finding these notes quite helpful actually. I might do this more often. Then I got a very clear agenda. Oh, just delete this. Oh. So anticipate the correction. Done that bit. Great. Last but not least, after the correction. If the correction occurs, I'm a long-term investor. What should I anticipate next? Well, actually, we're going to jump to a daily chart because it's slightly more information that we're looking at. We've got a lot of stuff going on here, haven't we? Let's just clean this up. Actually, we drew it from the last time, right? It's pretty much what we said, I think, here. Right? This is what we're anticipating, right? This is what we said. We're talking about this part now, and we're anticipating this bigger move, this whole bigger move to this whole zone here, and there's corrections within that move. So let's just remind ourselves what we're talking about here. We're talking about a very simple, did I draw already? We'll do it here anyway. We're going to measure this, potential wave 1, and then project it from, let's see if we've got the right one. Yep, 1.618. Boom. Short to medium term, yeah, it's this region here. We're talking about, let me just do that one more time. Let me just make sure I got that. Oh, there we go. Around here. So expecting around $2.60. $2.60 in this region here, right? That'll be the next move and the next surge up. That's what we're anticipating. So you got two options. You go, hey Jagir, I don't really care about this short-term correction. I believe in XRP. I'm a longer-term investor, and I ain't got the time to be coming in and out of the market. You go, well, there's no action to be taken. Just know it's gonna go down, likely to go down before it goes up. On the flip side, you go, no, I'm a swing trader. I want to maximize my profits on this swing, wait for the correction, which is another swing, and then look to buy to trade this swing, right? So there you have it. XRP $1.83 region as the next high before a short-term crash, which I'm referring to as a correction. We said around 74 cents, give or take, but we need more data. It's not guaranteed, there's always high probability. And then the next surge, which you can be ready and prepared for. If you like today's video, like, subscribe, hit the bell notification. Let me know, what did you find most useful? Did you find me having the notes useful? And do you want me to do that more often? Because actually that was quite like a little checklist. Bump, bump, bump. And we can just scratch it. So we said, after the correction, we're done. So we've hit our agenda. By the way, take my masterclass. It's free, but it just allows you to get more information from this. Let's finish on a quote. Quote of the day. All right. From my book, I think this is chapter 5, right? This one's from Confucius. It does not matter how slowly you go as long as you do not stop. Keep going, keep learning. Profit, loss, losses and profits is all part of the game. Keep learning, but educate yourself on this. I can't tell you how powerful Elliott wave and Fibonacci price analysis is, and time analysis with momentum as well. It is so beautiful, and 50 to 60% of the time, especially in the crypto markets, it really helps us get really sophisticated information, especially when it comes to exit. People might be good at buying, especially if you're doing like launch pads or you're buying, IDOs and so on and so forth, and you're getting them really low. Well, the price is more than likely going to do really, really well. But I found people are terrible at taking profits. But if you can learn this 5-wave structure with price analysis with high probability, then you got an objective mechanical way of taking profits. That will create you into a superstar, separate you from the crowd. You got a higher probability of winning. All right, I'll see you soon.